Well, there's a little bit of a sheen which has come off for the mid-cap index. It's still holding up with a gain of around 0.3%, but nonetheless, the intraday chart should tell you more about the mid-cap index. But besides that, we have the Nifty, which is holding up quite steady, 70 points higher or thereabout, and the Sensex up around 265 odd points. Manisha joins in now to tell us what she's looking at in the entire commodity and currency space. Manisha, it's all about gold.
It is, absolutely. You know, the gold prices have been inching up in almost all currencies, and we are near all-time highs in the Indian markets as well at 34,000 rupees. On MCX as well, we are trading at around 940 on your screens there. So very strong run-up. It's a 5.5-year highs for the Indian gold prices. If you look at the gold in US dollar terms, it's trading at a 10-month highs. It is also at around 13-month highs in Japanese yen. It's trading at a 14-month highs in Chinese yuan, 5-month highs in euro. So whichever currency that you pick, the gold prices are making multi-month or multi-year highs. If you look at palladium, that one is trading at record highs as well. So the strength really comes in on the back of US dollar decline. The US and China trade talks is what the markets are watching out. Also, there is a bit of a portfolio diversification that you have seen gold taking benefit of. And the most important to watch would be the FOMC meeting minutes today. Markets will take further direction from there. But having said that, we have been making higher highs almost every week in 2019 until now in the precious metal prices. So whether at these levels it still is a buy, let's go across. Ask Mark To of Wing Fung Financials. Mark, hi. Morning. Good to have you. What is your sense on the kind of run-up that we have seen come in for the gold prices at around $1,350 per ounce on COMEX futures? How are you looking at the prices now?
Thanks for having me. I tend to think that the gold prices, they should be one of the best investment or best bet in this year, because we can see that everywhere the central banks are going to loosen the whole thing and to have a more stimulative economic policies everywhere. Given the uncertainties, whether it's about trade deals or about the other kinds of issues like Brexit. So at this moment, the whole thing is quite positive for gold price. But of course, it is not going to be overwhelming for the very short term. It should be some kind of a gradual increase in prices. But for the whole thing, the trading range, I think 1,300 to 1,400 should be very reasonable trading range for this whole year. And I still expect further upside given the momentum we are seeing in since last quarter, because of the Fed is going to change course in a very short period of time.
Fair point. Mark, also, how are you looking at silver? Because while, of course, the gold prices seem to be performing well, up rather 6% in 2019 until now, silver really seems to be playing a very weak second fiddle to this.
Yes, comparatively, we can see that the other precious metals do not perform quite good as gold does. But there are exceptions. For example, palladium or even platinum. So we can see that they have different dynamics. But for silver, I'm afraid that we should still treat it as a second best compared to gold, because from the investors' point of view, the gold bucks, you may say, they try to treat it as some kind of alternative to the central bank's monetary policy bets in de facto. So we are going to see that the investment demands will be increasing for the gold ETFs as well as the futures. And I think that the trend is still becoming a reality.
Mark, one final quick question. So, you know, much of the strength that we have seen in gold and silver and other metals also come in on the back of weakness in US dollar. How longer do you see that phenomenon lasting?
The whole thing, we have to, first of all, we have to have different perspectives on precious metals as well as the basic metals, because the latter is more affected or more sensitive to the global economic environment, the real growth in economic terms. So I still think that the best bet, given the central bank's stimulative policies, or at least the slowing down of the interest rate hike, I think gold price should still be the best.
Okay. Okay, all right, Manisha as well as Mark, thanks very much for joining in with your thoughts. We need to take a break now, but up next we're going to be discussing market technicals. Ashwini Gujral will be with us to tell us what he's strategizing today.